Everybody, welcome to Trading Caps exclusive analysis. In today's video, we're discussing Tesla, some of the EV stocks, and mainly the mega caps. We'll be reviewing some of the big boy charts today. Starting with Tesla, horrible price action day for Tesla, closing down 5.59% off of this heavy, wide range red bar gap down. What was interesting was the market actually opened up green, but Tesla was weak throughout the entire pre-market. It was never really green. It tried going green briefly. But it didn't even manage to do that, and it was pretty much red throughout the whole entire day, while the rest of the cues were green during that gap up open, which got faded. Tesla right now is at a critical area. Why? Look at this weekly chart. Looking like a bear flag is about to break down. You could be triggering a potential bear flag in the near term, simply taking a high pivot to your low pivot to your bounce zone. That gives us a target roughly of about 139 on the Tesla chart. And what's interesting about that is that takes us right into this long-term channel that goes all the way back to your 2020 COVID low, this main pivot in 2023. So there will be a potential buying opportunity, massive pivot here, massive daily chart gap fill, also lurking off of this key 145 zone. So this is definitely a big chart, daily chart and weekly chart support level that Tesla is coming into, especially if we break this weekly chart bear flag to the downside. Just recognize that Tesla is definitely being affected because of interest rates continuing to surge higher, obviously the demand. So looking at some of these other stocks, Rivian continues to break down. I mean, Rivian's chart's looking exceptionally bearish. A head and shoulders on the weekly chart was triggered all the way back here, and your target really sets you down to about $2 on the chart, which is pretty crazy to think about if that was to happen. Even a stock like NIO continues to just bleed lower and lower at this critical time, coming into some big support. All right, let's look at the mega caps now. Apple. Today, Apple saw a bit of a down day across with the whole QQQ market. This was another one that was actually weak during the pre-market and never really managed to firm up. It kind of got sold into throughout the whole session today. Obviously, you had that big technical breakout of this falling wedge pattern. Apple's still likely going to go lower. This is still all bearish price action, even though you had a short-term breakout. Today, Microsoft actually underperformed the market, had a pretty big down day on Microsoft, closing down 1.96% and breaking a critical support zone. If you look at the long-term weekly chart of Microsoft, take a look at this key resistance zone that we were trading into. Massive pivot going all the way back to your COVID, your technical breakdown area here, retrace, rejection, retrace again, rejection. Now you've tried breaking above this zone, but really never ever did it with conviction, and you're starting to come in and potentially break this key support zone. There's a lot of levels on Microsoft that can be discussed as intraday support, swing trade support, but really buying up here is probably not favorable, despite Microsoft will likely get some sort of a bounce at some point once the QQQ completes its little bit of a corrective downward pressure here. Looking at Google today, that also took a sell side day. Another monster day down for Google, closing down 1.82%. You look at Meta today, Meta also got hit to the downside, closing down on the session 2.28% as well. Meta is also into some really big resistance point here on really the monthly chart. If you look at the monthly chart going back all the way to its inception, it's trying to have a monthly chart breakout out of this long-term monthly trend line in a very extended move. So at this point in time, Meta is still holding above this key monthly trend line, which is around the 480, but it's trying to get broken down by this previous little neckline. This was your head and shoulders on Meta previously. This was your neckline where you actually broke down and had your capitulation, and you're retracing into this vicinity in a much higher fashion, and you're obviously seeing some sellers in that region at this point in time. Still a very strong extended stock, still way above its previous gap up on that massive earnings gap up all the way back from February of 2024. Let's take a look at Amazon, because that one was putting in new all-time highs last week, and take a look at this, finally coming back in again, getting rejected at that previous all-time high double top zone. So that resistance right now is being met with some sellers. Your next support, I think, is roughly back in this region here at 177. Definitely seeing some weakness in that consumer discretionary ETF. In the near term, if Tesla continues to fall lower, it could put pressure on XLY, which would put pressure on the overall Amazon chart as well, since it does play in that ETF. Nvidia, still just seeing potentially a failed breakout here. This impulse green candle has been lost on Nvidia. Not a good close for the bulls in the Nvidia chart, because this did lose that breakout potential, and you're now back below that previous little neckline zone that was looking quite bearish when you triggered this key neckline the first time here, and then you came up and recaptured it. Now you actually got another daily close and a couple hourly closes below that key resistance. So this downward chart pattern could start to resume based off of this sell-off. You could potentially have a 750, 748 target on Nvidia, which would be a pretty decent sized continuation move down the Qs. That's about a 12%, 13% down move in the overall Nvidia chart. And that kind of does put into the perspective what the SOXX could be shaping up to do here. Let me be clear though, we're selling off from a bull market high. Look at the support we're hitting on SOXX. Odds are we could even have a bounce all the way back up to this wedge pattern high. So just be mindful. Markets, are selling off from a bull market. We will get bounces along the way. And especially when you have big down days today where you have a 2.7% range on the NASDAQ from this gap up. It was a pretty astonishing range from this gap up today. From the gap up today at 442.20 around that high, you got absolutely sold off and annihilated to the downside. But as of now, we'll see if we get some sort of a bounce. I do think that there's a definite scenario. If you don't get a bounce here, probably your gap fill is looking very, very likely on the NASDAQ. Hopefully this video analysis helps, and stay tuned for more price action as we're set to progress through a little bit of a choppy, turbulent time here. If you're not really sure as to what yields rising, VIX rising, a lot of geopolitical war headlines, midterm election cycle coming up, definitely pay close attention to different traders, see how they are, and use less capital when you're committing to trades, because it's certainly a volatile period here, and we could go through some choppy waters in the near term. If you're bullish, if you're bearish, there's ways to make money both ways, but when the trend starts to break down, that's when you got to be cautious if you've been long this market and haven't taken profits. Again, you're still super elevated in indices and a lot of charts, but it's probably prudent and would have been a prudent thing to do to take profits a long time ago if you're still net bullish. And right now we are going through a bit of a distributive phase. On that note, take care, everybody. We'll see you on the charts a bit later.